Hey everybody, Courtney Smith here with our October 11th, 2021 Wall Street winners. All right, let's dive right into it. So the early part of the week was pretty stable and then a gap up, which is very strong, but it wasn't on heavy volume. So that takes away a lot of the bullishness that occurred on Thursday. So here we have, I'll get to my prognostication in a few minutes. Purple predictor starting to be neutral. It's not bearish anymore, so that's a plus to the market. When something shifts from bearish to neutral, that's a positive for the market. So there's that. Now let's take a look over here at the Dow Jones. Dow Jones doesn't make a lower low, hasn't made a higher high, little gap up. We see that buying pressure is moving up pretty briskly, selling pressure is coming down, still selling pressure a little bit higher than buying pressure. What about the NASDAQ? Nice gap up as well, but where's the volume to confirm it? No volume. So we're still making lower lows, lower highs on the NASDAQ, S&P, but not the Dow. So we have a mixed picture. It's not bearish as it was last time. It's more neutral. Our seasonality indicator remains neutral for both the industrials and for the utility sector. But we talked about this last week about how the seasonality was kicking in bullish for a while, and that's what caused our rally on Thursday and a bit on Friday. We're still here early in the week. We're still in that bullish seasonality, and then we drop again towards the end of October. So really look for the coming week to be a bit strong, to build on the strength of what happened late last week, and then to fade probably before the end of this week. We'll probably start to go back down again. But notice we're really in a sideways pattern. The bear move is probably over, and we're getting into this bullish seasonality period. So look for stability in the market. We already have a little bit of that. The Dow didn't make a lower low. The S&P and NASDAQ did. Now the Dow is the least important index of the three big ones, but nonetheless, that's a sign of some stability. We see another sign of stability here. Money's coming out of the bond market and moving into the stock market. They want stocks. They don't want bonds anymore. Why? Tina. If you're a bond investor, you're looking at Tina. There is no alternative to the stock market. It's not bonds, it's not cash. If I'm an insurance company or a senior citizen, then I need income. Can't get it in the bond market. I can get more income by buying the Dow 30 than I can buying a bond. Risk indicator, stable. We got the breakout a week ago, still showing that the market wants a little. These are all little bullish factors, not major bullish factors, but little ones. Global shares, they rallied as well, but they're much worse off than the American shares. Why? Because is there a European economy anymore? Well, it certainly isn't bullish. That I do know. Yield curve is also a slightly bullish factor here. We're starting to get back up to the old highs that we had, and back then I told you it was pretty bullish. We had a nice sharp up move here. We're not grinding higher anymore. We're in a clear bull market on the yield curve. Why? Because bonds are collapsing, as I told you they would. Come on now. Wasn't I the only one that told you? Yes, indeed. All right. Bond key factors, higher interest rates. Gold is saying lower interest rates, but the CRB index and the 10-year treasuries in Germany are both showing that we should have higher yields. And so look for higher yields on the long end of the yield curve. We won't have higher yields on the short end until the Fed really starts tapering. Right now, the market says that's going to be around June of 2022. The dollar showing strength here, or consolidating strength, but it had been showing strength. And it's going to continue to show strength because of that yield curve. Because if you're a global investor, where are you going to get the highest yield? In the U.S. stock market and the U.S. bond market. So that's where you're going. And therefore, all that outside money flooding into the United States is causing the dollar to strengthen. In addition, the U.S. has the strongest economy in the world of major countries. Let me repeat that. It has the strongest economy in the world in major economies. So where are you going to invest? U.S. Gold, of course, just take it out back and shoot it, okay? All right. Gold key indicators, generally negative. CRB bullish, but currency prices are really hammering the gold market. You know, I'm a big believer in gold. I wish we'd go back to the gold standard. So on that level, I'm a gold bug, proudly. But I'm not a fool. If the price of gold's going down, I got to short it or at least not be long it. All those Johnny One notes are telling you to buy it. Oh, it's really cheap. It's really cheap. Yeah, getting cheaper, getting cheaper. Crude oil, strength. So last week I really felt that we wouldn't get much over 75, 76, 77 maybe. OPEC Plus came out and said they're not going to increase production any further. The global economy is slowly getting better. But the big story, of course, is the energy crisis in Europe, in China. Okay, we don't really have one in the U.S., but if they're short on energy in those two huge economies, then that means it affects the globe. Why are they having an energy crisis in Europe? Because the green energy didn't show up this year. So they didn't get enough sun, but more importantly, they didn't get enough wind, so they're having to go back to fossil fuels, which of course you can turn them on at a moment's notice, which you can't do with sun and wind. There you have to store it in a battery, but if they didn't have enough stored in batteries, so they're out of luck. China's different. China is also, it's a green story. The Chinese government is saying, that's it, we're going to go green, we're going to not do any more coal plants. And so they're shutting down electricity all across China. And of course, that shuts down the economy. Shh, don't tell anyone. So going green is causing them to have a shortage as well. So we talked about Bitcoin last time. We said if we broke these highs, we'd want to get long. So if you follow our advice, you should be long Bitcoin. Purple Predictor, very bullish right now. So this looks like a very good trade. And we're going to try to stay on the long side quite some time. Stop loss, though, we're going to keep it way down here. You could put it as high as this, but we're long-term players here. We think we're going to make a lot of money here in Bitcoin. All right, thanks, freebies. Love having you here. Fully paid up members. Hold on just a second. And if you're a freebie and you want to be one of those super cool, handsome, good-looking, smart, intelligent members of the fully paid up member version, you should go to WSW2021.com and sign up. It's a peanut for what you get.